Good afternoon, traders. Future here. I was recently asked whether now is a good time to buy, to step into GW Pharma. So I'm going to go ahead and do the analysis from scratch. That way you can see the way I break down charts, and that way we can also formulate a forecast moving forward, and to answer the question whether now is a good time to buy. Specifically, the question was um, because GW Pharma is at the 61.8 retracement level of this secondary leg up, is this a good time to buy? So I will show you that. Okay, see, this is where the question stems from. Uh, Price has retraced a Fibonacci 62% of this secondary leg up. Okay, generally, these are good opportunities. Whenever price retraces 61.8% or so, there tend to be reversals from there. I can give you another example of that just here. See, if you would have gone short here at the 61.8 retracement level, granted it did go a little bit higher, but that's okay. Ideally, you would have your stop at the previous swing high, and this was a reversal. So I see this over and over again. This is the most important Fibonacci retracement level. So it is a very smart question. So based off of this alone, I do think that it is less risky to buy here. At the very least, I can say that. But let's continue with the analysis and let's try to compound support for this level to see if now is indeed a good time to buy. So the next thing that I want to do is I want to go ahead and draw a trend line, because I can see here that there is a support trend line that was broken, which is obviously not a good sign. But let's draw it in and see what it tells us. Now, the way I'm going to draw this trend line is actually starting from the middle. And because this tool allows me to extend my trend line over to the right and to the left, I can kind of cheat and do a shortcut where, because my eye catches this price action here, I know this price action was bouncing from a trend line. I can do that. So you can see it works very well because it does provide support later down the line. You can also see here there was a small attempt to retest the underside. I don't believe this is a meaningful retest of this trend line, so it's very likely just off of this alone that we may see a retest of the underside of this pretty long-term trend line. Okay, the next thing I want to do is let's clean this up a little bit. Okay, is I want to draw the Fibonacci retracement level of the entire move up. We need to find the bottom. I believe it was 846. Let's take a look. There it is. Let's put in the Fibonacci zone, which typically is the 38% through the 61. So you'll have the 38, the 50, and the 61. Okay, so I'm going to get rid of the 61.8 because it is a bit away from current price action, and I don't think this is going to precipitously fall immediately. I don't think the market is in for a crash, considering we technically had a crash in August. So let's get rid of that just to clear up the chart. But this does provide very meaningful information in that the Fibonacci 38% retracement level of the entire move up happens to coincide with the 61.8 retracement level of this secondary move up. Okay, so this is most definitely support. But let's continue further. So what I want to do is I want to count the Elliott wave count from the top through today's price action. So let's zoom in over to the 4-hour chart and see what's going on. Let's zoom in a little further. Okay, right off the bat, this move down is impulsive, whereas this move has significant overlap. What do I mean by that? One of the rules of Elliott wave is wave 4 cannot enter the price territory of wave 1. So for example, there goes Siri talking to herself, excuse me. If I were to count this as wave 1, 2, 3, 4, and 5, I cannot do this because wave 4, the termination point of wave 4, enters the price territory of wave 1. Okay, so this alone tells me that I cannot label this as an impulse wave. Instead, this is a correction. It's a more of a complex correction. So what I'm seeing here is a complex wave A, a potential triangle, three-wave structure in B, and that would explain why this decline from this secondary high is impulsive, because C waves are always impulsive. Okay, so that the next thing I want to do is I want to zoom in further and count the subdivisions of this impulse wave. So let's go over to the hourly chart. Let's do the half hour. Let's move this out of the way. Many times what I like to do is I like to start to count waves, the impulse wave from the middle of the wave, generally because wave 3 tends to always have the clearest subdivisions. So I will label this, I will label wave 3 first. You can see very nicely, even the fifth wave has 5 waves, a very clean 5 waves within it. So this in turn completes a larger impulse wave. Let's get the degree right. Okay, so the question is as follows. Is this all of wave 4? Price may continue to go higher, only marginally higher, to complete wave 4, before we go lower in wave 5 to complete wave C. So the question is this a good time to buy? It's maybe a good time to start a position, maybe only part of a position. So let's zoom back out over to the daily time frames. Let's get rid of the impulse wave. And I'm zooming out because I do know at this point in time that this decline is corrective. That's a good thing for the long bias. If this would have been impulsive, then no, we definitely don't want to even entertain the idea of going long. But we have potentially a completed ABC with a, it was zoomed in. We require a tiny new low, but that might be a little too strict. Sometimes the market, if this issues a PR or for whatever reason, this stock is ripe to rally. We haven't even looked at moving averages or momentum. So let's do that. Let's look at RSI to begin with. We have two instances where this stock is oversold. I would like to see a greater degree of divergence, but it is marginally there considering that price is making lower lows. So the fact that, this is bouncing from 30 or so, RSI currently reached 31, this is telling me that momentum to the downside is limited. You can see the moving averages are substantially above current price action. So I like to trade retests of broken trend lines and broken moving averages. And this is setting up to be just that trade. We don't have a trigger just yet, but if you want to go ahead and establish a position here based on what we've covered so far, I'm perfectly comfortable doing that. Okay, we're talking about a percentage gain of greater than 10. That's a really good trade. Now, let's look at the flip side. Where are we wrong? Now, I'm not going to go into the Elliott wave count of this entire rise. What you can do is go over to futuremedent.com and search for type in GW Pharma in the search box, and you'll get the most recent analysis I did on this a couple months ago. But just to summarize, the operative count was that of a large triangle right in the middle of the price action. The issue here is that price usually tends to return to the apex of the triangle, which just so happens to coincide with the 50% retracement level of the move up. That gives us a target of 71. So there is risk baked into this trade, most definitely. It is up to you whether you want to take that risk. In the short term, I do prefer a bounce because this is a 5-wave structure. We should expect at least a 3-wave counter trend move up with greater potential due to it's very possible that this ABC may only complete wave A. And then we wouldn't expect a simple 3-wave structure to the upside of this degree. We would expect a larger 3-wave structure to the upside. Possibly through the end of the year before we hit new lows in another ABC, in an impulsive decline, in C, to potentially stop at the 50% or at the 61%, either or. But this is going too far out in time. So once again, let's take things one step at a time. This is why it's important to have perspective in multiple degrees of time. I'll start with the daily. Many times I'll actually start with the weekly and work my way down, just as we did here. So if you want to establish a position, once again, I'm going to conclude this video now. You can do so, but we don't have a trigger just yet. We are at support, most definitely. Fibonacci makes a case for it, and Elliott wave makes a case for it. Not to mention that we are substantially below The moving averages. Many times there is a moving average recapture trade that in this case coincides with a trend line recapture or retest trade. So in the short term, yes, this is support. We don't have a trigger just yet. Potentially maybe wait for a doji candle or a tiny 5-wave move in the 5-minute time frame. Something like this, but to the upside. So I hope this video helps. If you guys have any questions, please feel free to contact me. And if you guys have any questions, this was a subscriber request. By all means, there are way too many stocks for me to cover. So if there's anything in particular that you are looking at, please send me an email. And if I feel that the price action is something that I will share with the rest of the subscribers, I usually post it. If not, I will post it on your private user pages. So that's it for now. Good luck.